Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having an amazing day. We're taking a look here at BEL. I got a lot of requests from this one, mainly from my community members who are asking, why did we take this trade here? As a matter of fact, we took a trade roughly about a week ago. Here, see, we took some profits. There we go. About 62% in 8 days here we've taken as far as profit. This is our second target. We've got 3 more to go. Okay, so again, good stuff there. I'll explain what I mean by that and why we took the trade in the first place. It was basically a double bottom on the 4-hour time frame, and I'll explain kind of what to look for moving forward if there's other identifications we can make, on next breakouts or breakdowns, one way or the other. But before we do, I just want to laugh at this really quick. Thanks JCXP for lightening the mood here today. The garbage market that we are in right now is exactly that. All right. So again, you got to find your wins whenever you can. And once more, congrats to our community members for OGN profit 20%, Cyber 21%, and DAR, we hit this morning, and roughly about a day and a half later. So that was nice because I was sleeping for that fully automated trade, so it's nice. All right. Keep in mind, you can go ahead and follow these trades if you'd like. Crypto Cash Premium, link down below if you want to consider becoming a community member. What it looks like here, though, with BEL is pretty straightforward. We got this kind of cup and handle pattern, so to speak, here, where the price came up and broke out. Now we can expect this previous resistance level to be a potential support, and the price should continue higher. There's no guarantees in that. We'll look at a lot of other things too. You want to look at overextension and a few other key factors, but for lack of better terms here, you can kind of see that here. But let's rewind a little bit and explain why I took the trade in the first place. It's really simple, really straightforward. If you take a look at the candlestick patterns here, we can see there's a double bottom from before. In fact, let's pull up some Fibonacci retracement levels too, just to kind of confirm that for us. And we can see with the price action coming down here, we got our first bottom and our second bottom. We took entry right here at this range, roughly at about 56 cents. And coincidentally, when we got in, the price went down. That's kind of how it goes sometimes, right? But when you have this typical cup and handle and or double bottom pattern, it's a pretty strong indication it's going to continue. So in all reality, it should have stayed above this level, but instead it consolidated, retested its previous liquidity because there was a fair value gap in this range due to the fact the price shot up so quick, and then obviously it continued higher from there. So again, that was a kind of the concept of getting in. It wasn't just that one thing. There was a few other factors too. I believe we had a convergence on the MACD, and just some other things I like to look for as a swing trader. And again, 4-hour time frame is my favorite time frame for identifying opportunities for longer term movements, right? So again, we took profits in 2 weeks, or 1 week rather. I'm sure in another couple weeks we'll have some more profits being hit, right? But once again, we're here to focus on today. What's going on right now? It's not a shoulda, coulda, woulda. It's a what's going to happen next kind of situation here. So let's go ahead and take a look, starting with the daily. First things first, we want to kind of take a quick look at some previous liquidity levels. Again, there's going to be a liquidity sweep. That's what likely happened here with this candle wick. There's a good chance where we're going to see the price continue a little bit higher to fill that little bit of a gap there, so to speak. Then it could pull back. Keep in mind, if it does pull back, 0.786 is the next key level support at 66.6 cents. Easy number to remember. If we take a look at a fair value gap as well, there's a previous gap. You could see some further downside, but I think it's less likely. But looking at the daily here overall, we can see an increased amount of volume. Let's take a quick look at the volume profile too and kind of see here. We do have a strong volume profile right there at our entry at 56 cents. But more importantly, second and tertiary, we're looking at some resistance levels here. So you can see this second most amount of volume is right there, just above the price action, about 70 cents. Again, that's previous volume. It's this volume here. But once more, we are coming up on a resistance area. You can see pretty clear as day that the price action is getting rejected at that initial spot. So we need to build more volume at this level. So can the price break out and continue higher? Yeah, it probably will. But it will likely need to consolidate here at this 0.786, the 66.6 cent mark. Looking at the RSI, we can see RSI is kind of getting closer to 70. We're not fully overextended, but we're getting there. That does tell us that, I wouldn't say a turnaround is going to happen soon, but it does imply that unless we break through 70 on the RSI, we could see the price action kind of stay in this range here between 66 and 72 cents for a little while. Okay? But a leg up would make a lot more sense considering the overall momentum. We're back on the right side of tracks here. We got a good strong convergence, and let's go ahead and see where we're at for the moving averages. I'm curious about that here. Taking a look at the moving averages, we are pretty much right there. Look at that here, that 200-day SMA, right at the current price point. So again, if we can close at 67 cents or higher today, that'd be a pretty strong, impactful movement. Worst case scenario, though, the price does pull back. We are looking at the next Fibonacci retracement level at 0.618 as a strong secondary support. 63 cents looks like a nice little area there, right there where we can see the 50-day SMA. hanging out at about 62. So 62 to 63 is a nice little support range if we lose 66. Okay, so just something kind of think about. The more you know, the more you grow. All right, so take a look at the simple moving averages here. We can kind of see they're below the price action, again, aggregating roughly at that 0.5 mark on Fibonacci. That is very standard, right? The halfway point of Fibonacci retracement is a typical consolidation. In fact, we can see the price picked up there, rejected, and broke through. Okay, so it's really common for the price action to continue to retest key level resistances, and 0.5 is that common resistance. And what do you know? We're on the right side of the tracks now. We're on the other side. Therefore, it's a support level. The price does end up pulling back to 60 cents. We know fairly well that the price should bounce at that level. Not only because all the moving averages are hanging out there, but mostly important, we can see that 0.5 Fibonacci level there. Let's go ahead and draw out a trend line here for later, kind of see what's going on. We'll pay attention to this guy here, because that is running concurrent. And again, I like to kind of emphasize this. The trend lines often run with the 20-day SMA. So the 20-day SMA on the 4-hour here is telling us that we are on an ascending trend. We're definitely looking good here for a bullish continuation. Okay, so awesome stuff there here so far with what we see on the 4-hour. So the 4-hour looks fairly strong. Convergence on the MACD, we're testing 70 on the RSI. We could get rejected out here soon, which would reiterate the fact that we may need to consolidate and build a volume profile here at about 66 cents. But previous resistance, turn support, we could very well see the price consolidate here. So to me, instead of buying in and jumping in right now, I'd prefer to wait and see the price pulls back a little bit and then take a long from there. Because I get the question right now, like, hey, should I get in? Should I get out? What's the deal? Well, there's a lot of different schools of thought. It really depends on how you look at it. But we do have bullish momentum on all time frames here so far, daily and the 4-hour. That helps us understand that the overall momentum is up, but finding a good entry is ultimately what you're looking for, right? And to me, being a little patient, waiting for consolidation is a more appropriate way to go than it would be to just jump in because it's taking off. Okay, so again, try to exercise patience when it comes to this. It does look like it's wanting to hold on here. In fact, let's take a quick look at the volume profile. Not a tremendous amount of volume at this level, but we do have a decent amount at 63, and once again, of course, at 56 cent mark. But for the most recent time frame, last 24 to 48 hours, we can see here there's the most amount of volume at 63 cents. So that would be an appropriate entry target if you were to see the price pull back, or a good strategy to take here, and a lot of folks do this, and I like to emphasize this in my trading community, is simply put, if you want to get in right now, you don't want to miss the boat, go ahead and get a small amount in, right? Maybe a 33% total position size. Then you can add another 33% here. If the price pulls back to this level, you'll average your price down at roughly 65, 66, and the price comes back up, you're in profit. Again, you don't have to do that. That's not necessarily the strategy for every circumstance. In fact, you want to be careful because then the price never recovers and you can be at a loss. But this coin does look like it's pretty strong right now, in the overall sense of the fact that matters here is that we're above a key level resistance. We have a new support range. And at this point, it's just a matter of where you're going to get in. Are you going to get in here, here, or here, right? These three levels, just above those Fibonacci retracement levels, are important to recognize. All right, last but not least, let's go ahead and just summarize here. With the hourly, we want to take a look at TD sequential and understand that we are overextended here. But take a look at this history, okay? And that's, again, what you want to do in most cases, that we had a 1 all the way up through a 9. We had an extra couple of hours of overtime, and the price goes sideways and down. Hypothetically, we could see a very similar behavior, right? We could see a circumstance where this guy does one of these. Looks pretty similar, doesn't it? We're also hitting a 9 right now, so the price should consolidate at this level, come over here, come down to maybe just grab this amount of liquidity here. You can see this fair value gap in this range right there, and then once it hits that level, it comes right back up. What do you know? The previous high working as a new low. That's essentially what should happen. We saw the same thing happen here as well. While it didn't fill that fair value gap, and this fair value gap may not get filled either, we can summarize the fact that 66 cents is a likely new support level, but I do feel like a pullback potentially to fill that gap down about 64 cents might actually happen. Okay, so again, just some things to kind of think about. So me, I'd much rather be patient and wait for that, try to get in at 64, than trying to FOMO in right now. But again, if you do jump in right now, because the train could continue to leave the station, as we call it, we had kind of a joke in our community with that. What was it? Actually, I gotta show this to you. Yeah, this is exactly what happens, right? When you're trying to catch the train, you just get smashed, right? And that's how trading works. The trains are always going to leave. You're never going to find a perfect entry. But to me, a good entry would be a little bit lower in the price. Even though we should see the price kind of bounce here, if it doesn't, you could at least get a better entry. But once again, skin of the game, half position now, half position later, whatever you want to do there. The choice is yours, but I like averaging down personally on a swing trade. Typically, we have multiple entry targets and multiple profit targets. Best way to go, try not just to 100% every time. It doesn't exactly work that way unless you are scalping. All right, different story, different strategy for a different day. All right, I hope that made sense and I described that correctly. Thank you so much for watching. If you could help us grow our Discord, we got tons of new members over here. It's really awesome, and I'm super happy and thrilled to be able to have just some cool people in the group now. So thanks again for that. Obviously, Twitter and Telegram, you can go ahead and jump on over here as well if you want to have some more technical, fundamental updates. Those are all available on Discord, of course, if you prefer. But generally speaking, some folks like the Twitter and Telegram aspect. Links all down below. I hope you have a good rest of your day. Thanks again for your time. We'll see you on the next one. Take care.